Intrinio guest today is Alec Isaac. He's a sales engineer at Intrinio. Welcome to the podcast, Alec.
Hi, Andrew. Thank you for having me here.
Yeah, our pleasure. Why don't you get us started and just tell us about your personal background and how you came to work at Intrinio?
So, personal background, I had just finished up law school, and during law school, I was dabbling with data, finance, etc., really just trying to see what I enjoyed outside of law. And that's to say, heard from a great person in there, there's no better place to find what you want to do than going to law school. No one's going to give you grief for going to law school, right? Oh, he's in law school. So I pretty much went there, found what I wanted to do, and I ended up linking up with Intrinio after graduation as a sales engineer.
You came actually with a legal background, and now you're a sales engineer. For our audience who might not even really know what a sales engineer is, can you talk a little bit about what exactly that is for you?
Sales engineer, really, I mean, there's like solutions engineer I've been labeled as, etc. It's just a jack of all and a master of maybe one if you're lucky. But really, it's melding the DevOps, dev, and sales and customer success all into one role and just trying to balance everything equally, making sure your customers are happy, they're able to get going on their foot, relaying those requirements back to dev of what might make their lives easier. That kind of follows in with customer success, really. So it's just it's a feedback loop of sorts, right? Where you're getting to work with the customer, getting that feedback, then you're trying to help them and say, oh, well, while I'm helping you, I think our engineering team can do X, Y, and Z. That'll help a lot of people, right? So it's trying to take one person's issue, fixing it, and then having it generalized across a lot of people. So just really trying to help people.
So you're doing the sales engineer role, but you're also pulling insights out from what those prospects or customers are asking for to make the whole platform better.
Absolutely. That's what I really love about it because it kind of then molds into that product space where it's like, hey, we could use this new feature. Hey, we could use this new data, right? And you get that great kind of feel for what your customers want, what the market wants. And that's just really our job at Intrinio, is just providing that data, allowing people to really explore, experiment, and make the best they can.
So Intrinio is a financial data company. So like there's sales engineers at all kinds of companies, but like can you tell people like an example of like say a customer comes to Intrinio and they're looking for data, like what are the kinds of things that you would help them with? Like how do you help them get access to that data?
So with depending on what data they're looking at, let's say it's fundamental, it's usually around like, okay, how can I ingest your data? How can I make sure it's fresh for my users? How do I navigate, the API, any sort of limitations on it? Really just showing them the best practices to embed it on their site, get it in front of their users, and allow their users to have a great experience on their site. That's really it at the end of the day, is just making sure that end user has a good experience and using our own data.
So you're connecting with developers primarily who are going to test or use the product, and so they've got probably like more technical questions than the sales team can handle sometimes.
That sounds about right. Usually it runs the gamut of the spectrum of like, we get devs on there who, will whoosh over my head sometimes, right? They're using a stack I'm not familiar with. And that's when it's nice to be able to kind of break it down for the engineers, like when I have questions, right? Because I'm not perfect, I'm far from it, right? So it's like, okay, let me get these nice and lined up for our engineering team, see what their response is, and then I'll facilitate that moving forward. But really, it's kind of that first line of defense where it's like, oh, they have these questions. I've heard that question, 100 times, right? And so I can definitely help you there. And then also, if it's something where I'm like, maybe this is something we can fix internally, let's not hear it anymore. We'll make that change in our back end, right? And then we can serve it up and say, oh, we won't get that question anymore, right? Because it's just been fixed or, adjusted per se.
Yeah, you've got to use a lot of judgment, I think, to say like this is something that I can fix for this customer, or maybe it's something we can't do, or maybe this is something that I can fix for all the customers. So you're kind of sitting in between the customer and the dev team to make those choices to help everybody keep moving.
Exactly. It's like the guy from Office Space, right? I'm just a people person, I take the requirements from the customers and I go to the engineers, that's really it. Uh, in this case, no. So I feel a little bit higher than him, but yeah, I guess I do those by myself, right? But I don't actually walk. I still thankfully we're remote, so it's just like boop boop. But yeah, that's really how I feel like sometimes.
Yeah. Are you're on a lot of calls with customers? Like, is that how your primary mode of communicating was? Like, the sales team brings you in, and like, when in the sales process do they bring you in to talk to that customer? Is it like in the middle, the beginning, the end, all the above?
All of the above, probably. It really depends on how that process is moving, where their questions are. Like they know this is the data they want. They just want to be sure they can use it in XYZ way. I'll definitely get on a call with them. Calls are always easier than emails in every sense, right? Like emails are great for following up, but I love to be on a call because that's where I can take down the notes, get everything going, and say, okay, here's what they need. We can do X, Y, and Z. Let me see about Q. That's not the order, but like let's just balance it around. And so that's really where I come in. Whenever the sales needs me, just they drop me a line and we go from there.
Yeah. And like, so these customers that you talk to, they want to connect to data, right? They're going to pull it in on their end. How do they connect? Like, what are the access methods that you see most customers preferring?
Typically, it's through our API. It's just straight, just requests through those endpoints. We do get a lot of use with the SDKs. JavaScript's actually a really popular one, our JavaScript SDK, more so than Python, surprisingly, even though a lot of our clients are using Python. But what's really kind of started taking hold is Snowflake. We have that Snowflake database access, and so just a lot of these clients who are doing big time queries will just be able to pull it right from there. I don't have to worry about rate limits. Don't have to worry about anything. The database just updated from us, so I think that's really kind of catching on where people are just pulling straight from Snowflake.
Yeah, it's like the easiest thing for a developer. Like, if you can give them API access, great. If you can give them SQL queries against the database directly, that's even better. Do you think that that kind of direct database connection is gonna like spread? Like, people, I've heard people asking for Amazon access, like through an S3 bucket. Do you think that's the way data will be delivered in the future?
I think so. I think it's already super popular. As more and more financial data keeps coming out, all these new sources, right? It's just going to keep getting bigger and bigger and bigger. You're seeing all these data warehouses coming up, these data lakes. I think that's where it's going to end up is people are just going to dump it into some sort of large data storage, and just pull directly from there. That way they can really kind of make those queries as complex or as simple as they want. They're not bound by an API, even though we have so many. It's always nice to kind of have that flexibility and the ability just to, let us do the updating. It's always going to be updated, pulled directly from there. That's pretty easy going.
Yeah, it's funny because 5, 6 years ago, I was so excited about API delivery. I was like, "Yep, this is the way of the future." And then people would take it via API and then put it back in the cloud. So they would like pull it down and get like a CSV, put it in the exact same format it is in our database, and just move it to their database. And so I agree. I think that people are just going to kind of cut out the API layer unless it's streaming. I mean, that seems to be the case.
Yeah, and I mean, it'll always be there for like quick jobs, like if you just need just these forms of data, right? Like you don't need to go through the entire piece of making your own queries and everything. You're just gonna, hook up the API and away we go, right? So I think it's always in a matter of like how complex does the user want to get, right?
Do you think even before that, 10, 15 years ago, it was all FTP transfers, which are, you know, do you see anybody asking for FTP transfer anymore? Is that something that people ask for?
We don't, thankfully. I mean, CSV is still popular. I'm seeing Excel kind of slowly but surely coming around, especially younger clients, et cetera, right? They're looking for the APIs because they're just going to be able to manipulate it, with Python, et cetera, right? I'm seeing that kind of trend going around, but Excel is so powerful, it's so strong and so prevalent, right? Like I think over time, like the FTP will kind of disappear, the Excel will kind of really go away, but still probably a long way from there just because it's so prevalent.
Yeah. Yeah, it's going to take a lot of time. There's a lot of inertia behind those delivery mechanisms. So do you think more and more people are learning Python or like other coding languages and kind of replacing that Excel user? That do you think that's what's happening?
I think so. I think it'll always have a place because it's great to kind of display and get a feel for the data. But I mean, like I said, I couldn't see it ever really going away. But I know like Google Sheets, Google, all of that's kind of like popping up more and more, right? So just different flavors of the same. But I do see a lot of our users really kind of cranking it through Python, data frames, just really gives you a lot more, once again, flexibility to manipulate. And I think it's that flexibility that people are enjoying having. Too much gets you in trouble, but it's nice when you can find, 10 different ways to do a thing.
Yeah. Well, let's talk a little bit about options data for a second. So, like, if you read the newspaper, you read about options recently. It's just been a huge craze of talking about a lot of retail traders getting into options. Do you field a lot of questions from people looking for options data?
We do. That's honestly probably been one of the more popular data points people are looking for is that options data and all types, flavors. This is from retail users looking to pull end of day to track things, and then also like institutional grade where they're looking for that granular snapshot. And so options has definitely taken its hold on the public and everyone. And even in the markets, it seems like, the tail is wagging the dog sometimes, where options will rip, underlying has to kind of catch up, etc. It's crazy time.
Yeah. What are the challenges for people that are trying to get that data? I mean, it's a very different animal than equities data, I'm sure. So like, how do you coach somebody, or like, what kind of questions do they have? What are the stumbling blocks when you're trying to pull down a data set like that?
The really the big ones are you can kind of they'll want to see the Greeks and the volatility with every piece. Some providers out there will only just have that kind of like end of day price, and that's up to the user then to kind of use Black-Scholes, calculate all of that out. That's where I think a lot of people breathe a sigh of relief with ours, where they see they got the Greeks, the IV, they got the open high lows close, all of that data kind of coming through. And we offer it not only in the API, but the WebSocket. And so people who are really trying to not so much high frequency, but a little more, they want that constant flow. They see that and they're like, wow, that's a lot of data. I mean, it's a huge market, million plus, million and a half contracts a day moving through. Um, and for them to try and capture that data and make sense of it, we provide it in a great format. So I think that's really where users are happy.
Yeah. So the challenges that they brought to you probably in the past were like, hey, we want you to calculate implied volatility. The Greeks, like these are those that feedback loop you were talking about earlier, like that you told the development team, like, hey, this is something we can take off the plate of these users and make their life a little bit easier.
Exactly, exactly. That was part of it. And the unusual options, that's our latest feed. I mean, that's just really kind of blown up where we've gotten a lot of requests for, can we track it? Can you track it and deliver it to us in API? And we ended up, yeah, we were able to kind of track it, build it, and throw it through an API. And it's really kind of taken off where those users who wanted that ability to track large trades that are going on in the markets now have it at a click of a button. So very easy to do.
Can you talk a little bit more about unusual options? I mean, 6 months ago, I had no clue what unusual options were. I bet a lot of people haven't heard of it before. Like, what is that? What is that? What's unusual about it?
What's unusual really is just the sizing. So, the main two you'll see are the blocks and the sweeps. Blocks is just those very large trades in one unit, like a block order going through the system. And a sweep is someone's throwing an order against every option exchange out there, and they're trying to get filled on every one possible up to X dollar amount. And so that'll really kind of, when you pick that up, it's like, okay, this person, depending on where it's asked, bid, ask, sell, buy, etc. You can see, okay, they're bullish or they're bearish on this kind of movement. You get a little insight to it, but it's really great as a supplementary source because you really never know what direction they're going in, right? Are they hedging a play? Are they, adding on to a play? It's kind of it's great as a starting point, like a great base. Like, okay, there's a lot of unusual option here. Like, let me look into it. And that's kind of what we always tell, when people are looking for it. Like, look, we don't predict the future, but this data is a great place to start. Like get you going there, get a feel for it, and make those decisions.
Yeah. So, like, you're dealing with businesses that are coming looking for data, like options data or market data or fundamentals or whatever it happens to be. They're trying to get connected, trying to get the data, and then that's not the end goal for them. It's not just to like get a hold of the data. They're going to go off and do something else with it, right? So, like, what kind of stuff are your customers trying to achieve? Like, what are you enabling for them?
For the most part, especially with the fintech companies, it's enabling them to, everyone's trying to assist the retail trader now and get them on the same level, same ball field as everyone else in the markets, right? And so for them, it's really like we come across some very novel ideas of, hey, like the unusual options, right? This is a very confusing sphere, right? We're going to take your data and we're going to break it down in these easily digestible kind of content bites, right? Where they'll break through everything I just said into even further detail and really help their users understand, like, here's what this data is used for, here's what X is used for, right? Just really allowing them to kind of look through all this data and see, like, okay, I should be doing X, Y, or Z with it. That's really at the end of the day, it's they're making it so that other people can make the best investment decisions possible.
That makes a lot of sense. What and what are the what are these retail traders competing against? I mean, it's a professional trader who's just got a huge budget for some custom built terminal. Is that who they're up against, really?
I mean, at the end of the day, absolutely. It's really just you're going up against millions, billions sometimes in funding, right? And that research, you have to kind of play in your ballpark. And I think for myself as an individual user, the only thing I have going for me is I don't have a mandate. I don't need to stick to, growth, value, et cetera, momentum. I can choose what's best for myself. And so I have that flexibility, which a lot of these larger institutions, right, they've pegged themselves as we are a value fund. So they might see these growth stocks ripping, but like their mandate, they have to stick with value. Or, the 13F, the best ideas, that kind of piece where they have some great ideas, they have some great plays, but they have once again they have to do right by their own kind of investors, and they can't put all their eggs in one basket. Where you and I, right, we can get a little more flexible with that. So I think that's really the biggest edge that an individual has right now is just the flexibility and a long time horizon. I mean, I hope.
Yes, I hope so too. And now more tools, like because 10 years ago you were just on your own, right? You were just reading Yahoo Finance or something, and you didn't have any choice of tools. And so now you're here helping all these different developers build those tools so that you can kind of give them even a fighting chance.
Exactly. That's it at the end of the day. Just really a fighting chance to feel comfortable with the decisions they're making. I think that's the most important thing ever, right? Where you're not just kind of, yeah, like 10 years ago it's like, oh, I guess I'll pop this, and like paying $8 to trade it, and you're like, all right, well, I hope it works. Now it's just like, okay, I've read X, Y, and Z. I've seen, all these comments, these analyst opinions, etc. Right? I'm gonna dip my toes.
Right. Yeah, you've got a lot more information, and it doesn't cost you as much. It's funny because that was only a year ago that all the brokerages went to no fee trading. And do you think I think that no fee trading has really actually driven options because the brokerages still can charge for options trading, or that's a big value add where they can make their money. I think Robinhood makes like 60% of their money off of options trading. Is that something you've noticed from brokerages that are trying to add that functionality as a way to, because they can't charge for equities trading, everybody would go somewhere else. Do you think that's another reason why options are becoming so popular, is that brokerages are pushing for a revenue source?
Absolutely. I think, I mean, they're making it more prevalent. I know, like most brokerages, yeah, it's like 60 cents a trade on them, right? So, like, they're really kind of ramping it up. That's where they're making their money. And also just, you can get that leverage, right? Where why play the lotto? Why do this, right? When you can just, throw a few bucks or more, et cetera, right, on some options, out of the money options. That's really kind of where it's at, where it almost seems like when everyone was locked up, it was entertainment, right? It was like, oh, okay, like I don't need to turn on this Netflix series. I can just, turn on Robinhood and then just see like how is today gonna be a good one, or am I eating ramen at the end of the day? Like, I think that was what it came down to, was just like that entertainment, right? You're not spending your money at the movies. So I got $20, whatever. Like, let's throw it out there.
Yeah, it's like sports betting. Yeah, it's a replacement.
Yeah, but there's no sports. That's what I'm saying. So you're either betting on squirrels racing, or you're like, I guess I'll go, try my hand at some options.
Yeah, that's all. So, you do you do a lot of do you have a lot of projects going on outside of being a sales engineer for Intrinio? Like, are you working on any of your own personal coding projects you could tell us about right now?
Always something in the fire there. Right now, it's more on 13Fs. So I'm very fascinated with like kind of like I was saying earlier, like the best ideas of who's playing what, and just trying to back test that out. I know we have our own 13F feed, which makes it great. So I can just kind of pull in all that data from institutionals and see like, okay, they moved out of this position, they moved out of here, right? It's like a great starting spot for me, right? It's like chasing steam per se, right? It's like, okay, it's good enough for these guys, and they have all these resources, right? Like, let me do a little deep dive. So it's kind of a little cheating per se, right? But I'm just trying to get like a screener per se. So that's really one of them with the finance side.
The 13F is an SEC filing that shows institutional trading, like what the big fish are buying, and instead of if you can't, it's like if you can't beat them, join them type strategy. Like they have way more money, way more research, bigger team. So let's see what they're doing. Let's see what they're thinking, and use that as a starting point for your own trading strategy. And you're screening through that, saying like, okay, which securities are getting the action from the big fish? Is that your strategy?
Yeah, absolutely. Just kind of like top 10 across the board. And, there's a caveat with that always of like, those are pretty well delayed by the time they have to file. And so you have to ask yourself, like, they might not even hold this anymore, right? Like, this might have been theirs. So I try and stick with firms which have that, like, kind of longer term horizon of investing. And so that's really it. Like, you'll look at some like high frequency trading firms on there, right? And they'll put thousands of securities and they hold, they're not there anymore, right? Like those are just gone. But like longer term, like Berkshire, you can tell like, okay, he's gonna have a long term outlook there. This is something I can take into account when I'm screening these firms. And so just always interested to see what they do. Especially when there's a small position, like a very small stock, it's like this is something to take note of because they'll crush themselves getting out of it if they're wrong. So that's always what I like to kind of like really look into.
More interesting than being in the law.
I did enjoy the law, but I wanted to try some other things first. I had a lot of these passions come out, and I found I was looking more into finance, looking more into developing more than I was into law. And so I was like, okay, this is a sign that I need to go this path. I need to really try this out. But I say that I really enjoyed law school. I loved my teachers, etc., like everyone I went there with. So it's a great experience, and I'll be thankful for it. But yeah, here we are. We got to try some new things.
Well, we're thankful for you. Thank you for coming on the podcast. It was really fun talking to you, Alec.
Absolutely, absolutely, my pleasure, and thank you for having me. It's been a treat.